quickly. The silver market is sending a warning that most people are not prepared to hear. Big market moves never start with noise or headlines, they begin quietly, quickly, when attention is low and confidence is high in the wrong direction. Right now, silver is showing early signals that historically appear before major shifts, quickly. These signals are not designed for the crowd. They appear for those who know how to look beyond daily price movement and understand market behavior quickly. When the warning phase is active, the greatest risk is not loss, it is ignoring what the market is clearly communicating. In every major silver rally, the same pattern repeats quickly. First comes disbelief, then hesitation, and finally regret. During the disbelief stage, prices seem calm and controlled, which creates a false sense of safety. Quickly, people assume there is plenty of time, but markets do not move on comfort, they move on pressure. Pressure builds slowly, invisibly, quickly, until it reaches a point where it can no longer be contained. The warning signals exist to give a small window of preparation before that pressure is released quickly. What makes this moment critical is that the warning is not obvious. There is no panic, no breaking news, no dramatic headlines. That is exactly how early opportunity looks quickly. The silver market is known for explosive moves that happen faster than most expect. When confirmation finally arrives, it comes with speed and volatility quickly. Those who wait for certainty usually enter when risk is highest and reward is lowest. The warning phase is uncomfortable because it demands trust and analysis rather than emotion. Quickly ignoring early signals does not protect anyone. In fact, it exposes them to the worst outcomes. The market does not reward late decisions quickly, and it does not pause for those who need extra time. Every cycle proves that preparation always beats reaction. The warning phase is not about predicting exact prices or dates. Quickly, it is about positioning mentally and strategically before the shift becomes obvious. Awareness at this stage separates disciplined thinkers from emotional followers. Quickly, this moment is an invitation, not a guarantee. It asks for attention, patience, and decisiveness. The silver market will move whether people are ready or not. Quickly, the only real choice is whether to recognize the warning and respond with intention or to dismiss it and react later under pressure. History is clear on this point quickly. Those who listen during the warning phase are the ones who stand strong when the move finally arrives. Smart money never waits for permission. It moves quietly, early, quickly, and with conviction long before headlines confirm anything. In the silver market, this behavior has repeated across every major cycle. Large players do not chase price quickly. They position when uncertainty is high and public interest is low. Right now, silver is entering that exact phase where informed positioning matters more than popular opinion. Quickly. This stage is uncomfortable for most because it requires action without applause. What separates smart money from the crowd is not access to secret information, but discipline. Quickly. While the majority looks for reassurance from news, social media, or short-term price action, experienced participants focus on structure, supply dynamics, quickly, and long-term pressure building beneath the surface. They understand that by the time excitement becomes visible, the risk has already increased. Quickly, smart money prefers quiet accumulation over loud celebration. This phase is defined by patience and confidence in strategy. Prices may move sideways, shake out weak hands quickly, or appear uninteresting. That is intentional. Markets are designed to test belief before rewarding commitment. Smart money uses this time to build positions slowly, quickly, knowing that true opportunity rarely feels comfortable. When fear replaces excitement, positioning becomes more attractive, not less. Quickly. Many people misunderstand this stage and interpret silence as safety. In reality, silence often signals preparation. Quickly. Silver has a history of sudden momentum once accumulation is complete. When that moment arrives, price does not ask for confirmation, it moves with force. Quickly. Those who positioned early are already calm, while late participants scramble for entry under pressure. This is why positioning matters more than prediction. Quickly. Smart money is not trying to guess the exact top or bottom. It focuses on being aligned before the shift happens. The silver market does not reward perfection quickly, it rewards preparedness. Those who understand this phase and act with clarity are rarely surprised when momentum finally reveals what was happening all along. Quickly, pressure in the silver market does not appear overnight. It builds slowly, layer by layer, often unnoticed by those who focus only on daily price changes. Quickly, demand increases quietly while supply tightens in the background, creating a situation where balance becomes impossible to maintain. This pressure is invisible at first, quickly, but it is real, and history shows that when silver reaches this stage, stability is only temporary. Markets can absorb pressure only for so long, quickly. Small fluctuations and sideways movement are not signs of weakness, they are signs of compression. Like a spring being tightened, each moment of calm adds more potential energy. Quickly, silver is especially known for this behavior. When pressure finally releases, the move is fast, emotional, and unforgiving to those who are unprepared. Quickly, there is rarely time to adjust once momentum begins. What makes pressure dangerous is that it creates false confidence. When prices do not move dramatically, quickly, people assume nothing is happening, but the strongest moves are born from quiet conditions. Quickly, rising demand combined with limited availability does not need headlines to be effective. It works silently until the market is forced to respond. Quickly, by the time the response becomes visible, the opportunity has already shifted. This stage challenges patience. Quickly, it tests whether people can stay focused without constant validation. Many exit too early or hesitate too long because pressure does not feel urgent until it suddenly is. Quickly, silver does not give repeated chances once it breaks. The window between compression and expansion is narrow, and hesitation during that window is costly. Quickly, understanding pressure is about recognizing inevitability. When opposing forces build beyond control, release is not a question of if, but when. Quickly, the silver market has reached a point where pressure cannot remain hidden forever. Those who recognize this stage prepare themselves mentally and strategically. Quickly, knowing that when the release comes, the market will move with speed and purpose. In the market, hesitation is often more expensive than making a calculated decision. Quickly, many people believe waiting feels safer, but in reality, waiting without a plan increases risk. Silver rewards those who prepare early and act with intention. Quickly, not those who wait for perfect clarity. By the time everything feels obvious, the opportunity has already changed. Action, when guided by understanding, is a form of control. Quickly, hesitation usually comes from the desire for certainty. People want confirmation, approval, and reassurance before moving, but markets do not operate on comfort. Quickly, they move on imbalance and momentum. Silver is especially unforgiving to indecision because when it moves fast. Those who hesitate are forced to chase quickly, and chasing is where mistakes are made. Acting does not mean rushing blindly, it means making informed decisions before emotion takes over. Quickly, clear plan removes fear and replaces it with purpose. Those who act early have the advantage of calm thinking, better positioning, and flexibility. Quickly, they are not reacting to pressure, they are already aligned with it. Every major silver move in history proves the same lesson. Quickly, the biggest gains are not captured at the peak of excitement, but during the quiet moments before it. Hesitation keeps people stuck watching while opportunity passes. Action, quickly, even when uncomfortable, creates momentum and confidence. The market does not reward those who wait for guarantees, it rewards those who prepare, decide quickly, and move forward with discipline. In silver, hesitation closes doors that action keeps open. The choice is never between action and safety. Quickly, it is between intentional action now or forced reaction later. Every opportunity has a lifespan, and in the silver market, that lifespan can be shorter than most expect. Quickly, windows do not announce when they are about to close. They narrow quietly while people debate delay and distract themselves with noise. By the time the closing becomes obvious, quickly, the advantage has already disappeared. This stage is not about urgency for drama, it is about awareness of timing. The silver market has always moved in phases, quickly. There is accumulation, pressure, release, and then regret. The closing window exists between pressure and release. It is the final moment where decisions can be made calmly, quickly. Once the window shuts, the market moves on its own terms, leaving no room for careful planning. Those who act early operate with clarity, those who act late operate with stress. Quickly, many people assume there will always be another chance. In reality, opportunities repeat, but conditions never do. The price, risk, and reward change every time, quickly. Missing a window does not just mean missing profit, it means entering later with higher risk and lower upside. The market never compensates for delay, quickly. This moment is about choice. Not everyone needs to act, but everyone needs to decide. Ignoring the window is still a decision, one that hands control over to the market, quickly. Awareness restores control, preparation restores confidence. When the window closes, only those already positioned remain calm. The silver market will not wait for consensus. Quickly, it never has. As the window narrows, the cost of inaction rises. The final lesson is simple: an unforgiving act while the window is open, quickly, or accept the consequences of watching it close.